growth, outlook from here on and consolidates their market position as well. So net positive. Further details are awaited on the capex plans.
Okay, all right, Nigel. So 0.75% lower on Tata Steel. Maybe just quickly put up Indigo and where that is settled at the end of the pre-open session as well. We can sort of move on from there. It's down 3%, 46.50. So 150 rupee additional knock after yesterday's 3% cut. So it's got to hurt. Let's just start with how things will open. First rates anytime now. It's kind of flattish. The indication that is 30 points on the Nifty now and about 58,980 on the Nifty Bank. We are starting the day higher, at least in the large cap frontline indices. Mid cap index is unchanged. The small cap index is red, but largely unchanged there as well. So it's about 2:1 out of the gates in terms of advances to decline ratio, but that will settle. Yesterday as well, it was about 2:1. But I mean, just the nature of names which were on the advancing side, with that 2:1 advance decline didn't provide too much confidence. 25,770 is where the Nifty is opening up at 2% lower, it's not 3.5%. So some buying coming through on Interglobes, 4,700 plus. We've got first look at the Nifty heat map. You've got Tata Steel, Infosys, Wipro on one end. Indigo, of course, right at the other end of the spectrum. Power Grid, Titan are some of the other names. Split right in the middle. And I think it's telling that the Nifty is about a 1 point change. So absolutely flat. Rima.
Indeed, teetering between the red and the green line. So flat opening, not quite the 7,500 point gap up that the GIFT Nifty was suggesting. In fact, Asia is also weakened. If you pull up the benchmark Asian indices, they're all in the red now. Well, let's get to the big winners then. Sectorally, strength is seen in IT, Infosys, TCS, Wipro, all up between 0.5 to 1%. The rate cut by the Fed helps. And plus, TCS has gone ahead and made a large acquisition for 700 crore rupees, $700 million, pardon me, and that is helping boost sentiment there. Tata Steel is your top gainer. Nigel was telling us the news there. So Tata Steel is up nearly about 1%. Both Eternal and I think Swiggy are coming in for buying today. Swiggy, of course, is up over 1%, but Eternal too, which was under pressure yesterday, has rebounded a bit. So green for Eternal. Eicher Motors is higher in trade, Max Healthcare. A couple of these pharma names like Cipla, Dr. Reddy's are getting bid up. On the way down, Power Grid, Bharti Airtel, subdued, Titan under pressure, HDFC Live, weak in trade. A couple of banking names like Kotak Mahindra Bank in the red. And Interglobe Aviation is now below 47.50. And so the cut continues on Interglobe Aviation. But all in all, absolutely flat now for the Nifty and the Sensex. So the downward pressure continues.
Well, that's right, we are struggling to find a few winners, but I found one. DCM Shriram, they have signed an MOU with Bayer Crop Science for collab in agri inputs and digital advisory. So explains why that stock is holding with a gain of closer around 3.5%. Smart uptake is what we get. I'm sure that we'll try to get the management later on to understand further with regard to this. What else is doing well? Lloyd Metal, I think the start was in the green, but however, yesterday getting into the announcement itself, the stock was up, I think, 3.5%. So we should get that one up for you. Actually, in fact, it's come in for some mild profit taking on that particular county. Uptown, that's a stock I think that's getting smacked. There was a preference issue, I think that's been pushed back. They have withdrawn the proposed preference issue of around 1.5 crore shares. So that explains why that stock, in fact, is down close to around 5% or thereabouts. Besides that, I think the markets are trading with a bit of a negative bias. The headline index is flattish. The broader market's under pressure. Equus Limited, the one that listed yesterday, that's holding with a gain of around 3.5%. Hindustan Zinc in line with what we're seeing on silver prices. A melt up is what we're seeing. In the last 45 years, numerous times, silver went to $50 and then U-turned. This time, it's moved to around $62. So that's why the street likes it. And that's the only way you can play silver. And Vedanta is the one that holds stake in Hindustan Zinc. So that as well is trading in the green. Otherwise, a flattish start with a negative bias on the broader markets. All right.
Well, I think, first rates are settling down. Interglobe was showing a 3.5% cut, is down 1%. Under 1% now. So just a 40 rupee cut now on Interglobe. Well, more coming up on individual names in terms of broader markets, etc. But Rana Gupta is now with us, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. I don't know if you own Interglobe, but Talk to us a little bit about how an institutional investor thinks about something like this. I mean, a situation like this. Dominant leader, and of course, I mean, a lot of the criticism is for the dominant market leadership. And of course, I mean, the fact that because of its dominant leadership, there was so much pain and suffering all around for customers and flyers. And there are some remedial measures. How would you take a look at the situation? Would you say this is a great chance to buy, or would you say, there will be now measures over a period of time, not immediately, to encourage more players and kind of, reduce the over-reliance on one player? What's your sense?
Good morning. I think what happened to Indigo, I think taking a step back, for investors is very important to understand the revenue and cost dynamics. If I look at this situation, what this airline in question has to do, has to either cut capacity or increase staff. Either way, either the revenue per seat kilometer will perhaps trend down, or cost per available seat kilometer might go up. As of now, because its events are still very fresh, one does not know the impact that it will have revenue minus cost per seat kilometer. That multiplied by the seat kilometer is basically the profit of an airline. So right now, there is not too much of clarity. We know direction is trading down quite a bit. I mean, there are news reports out saying government has asked 10% route cut. There are news reports saying that the airline in question has to hire 10% more pilots. So one has to wait and see how this revenue and cost equation settles. Before that, I think taking a call on this is very difficult.
The way you rattled off all that formulae, it looks like you've done the numbers. Am I wrong, Rana?
No, we of course run the sensitivities, and we look at sensitivities, but these are sensitivities. These are in an Excel sheet. We need to see how the numbers play out when the dust settles.
Rana, hi, morning. This is Rima here. On quick commerce, in the past you've said that you see long-term opportunity here. But the landscape is shifting. Companies are building a war chest, and it's large. And if the attention next year shifts to growth over profitability, and profitability timelines get pushed forward, the focus is on market share grab, how will investors read this? Will this be share price negative? Is there a possibility that quick commerce companies like Swiggy, Eternal come under pressure next year, and that could be the buying opportunity?
So I think quick commerce companies have already come under quite a bit of pressure in the last 3 months. The stocks are down quite a bit, actually. And we continue to like them longer term. To our understanding, that the one company that raised capital, they have still continued to guide towards a break-even sometime middle of next year. Now, I think it is very important to understand that not to track just the discounts. In fact, our analysis, bottom-up study of all this quick commerce and the dark store suggests if the discounts are building long-term customer repeat orders, then it's might as well worth it, because slowly but surely, because the asset turn goes up, you can sell more and you acquire more consumers. It is beneficial for the longer term. So while this happens, the war chests build up, and there are some short-term and medium-term concerns and competition. We remain very optimistic on the long-term outlook of quick commerce. It's a market with huge addressable huge TAM, and there are 2 or 3 dominant players emerging. So as such, we remain quite bullish, and the correction that has happened in the stock prices reflects the concern that is out there. And I would say on the profitability, when the dust settles on the growth and market share grab, we remain convinced that profitability swing will be quite rapid. And if you just look at, let's say, some of these companies, they release detailed shareholder letters quarterly. If you just look at their stores that they has opened a year ago, their profitability, and then draw the similar kind of math that stores they're opening now, even if they reach half of that kind of profitability 1 year down the line, the profitability math will become quite clear to everyone. Right now, there are concerns, I understand, but I think as the stores mature, profitability is going to improve.
So buy at this juncture?
Profitability to improve, I think it will take another, because the one company has just raised money, and we hear that the third player is also coming to the markets. So I think you have to give it 2 to 3 quarters, but within that, I think profitability will be quite different, at least for the larger players.
Okay, all right. So you're sounding reasonably optimistic if you have a longer term horizon. Got that. Rana, good to see you in as always, Rana. What about the other big theme, EMS? You know, they were trading at very, very high valuations, but there was not too much concern because people said growth will be there. Now suddenly the focus has shifted from solely depending on growth to what about the cash flows? Some of them are negative. Receivables as well had spiked up. After the correction that we have seen, do you think some of these EMS companies are coming to a level that you'll be interested, given the kind of growth outlook that we have out there? Your take?
Sure, no, that's a very important and relevant question. So we are always enticed by EMS growth, but at the same time, the cash flows are also very important to us. In fact, a company which is growing very aggressively with low margin and high working capital is something that should always be avoided. And I can share with all of you that if you just study the balance sheet of any company and see that the net worth is represented by mostly 70-80% by the capital raised from the investors, then I think you got to have better check the balance sheets well and understand the business well, which means the company's company's net worth is basically funded by investors, and the company's PAT is not really adding to that net worth per se, because everything is invested in your inventories and debtors and whatnot. So the cash flows have always been important to us. So therefore, I think the point is that because the growth is there and the companies which can manage their cash flows, for example, let's say there is one company who has a very strong business in something and reinvesting their cash flow to ramp up the EMS business, that is something we would be actually quite positive on. In fact, those stocks have fallen and because in sympathy, and we believe that the longer term, with keeping the longer term in mind, these could be actually quite good opportunities. It can take some time for the doubts to gradually clear away, but I think two things should be remembered. Number one is the broad goal that electronics production from $120 billion in this year is going to grow 3 to 4x by 2030. And the leading companies, which has a strong balance sheet and good cash flows, is going to take a majority share of it. So that is something I think we should remember. And of course, one or two companies will mismanage their balance sheet. That does not define the EMS trend that we watch.
No, that's well put. And I think that's sound advice for viewers and investors out there, how to kind of sort of look at some of these companies. One of the basic ways to look at some of these companies. Yeah, Neogen, I'm just highlighting a bunch of names which were not in the mix in the morning at open, but 7% on Neogen, so 1,058 coming through here. There's Keynes is up 2%. It had a 10% flip-flop over the last 2 days. BSC lost about 4% yesterday. That is up about 2% right now. And so it goes. I mean, volumes are thin, very, very thin still. About 1,400 down, 1,100, actually 1,200 stocks are higher. So it's not very, very, it's not very disbalanced. It's kind of evenly matched at this stage. Some of these, we talked about quick commerce earlier, Rana, but, names like Meesho, which came to the market. And any actually on this one, what's your view?
So,
okay, here, let me preface, right? We spoke with the company and they said, well, focus on their number one metric is free cash flow. And they are saying that we will generate tons of it going forward. And that's how you should look at us. Go on.
No, I think that's, like I said, that the cash flow is always a very, very important metric. It's equally important for us to understand the cash flow is coming from where. Is it about the company's pricing power, or is it about efficiency operations, or it's a combination of all the factors?
If you look
in the question, I think they have gone out to say to investors that they do not charge their consumers or sellers. So basically, if a company is not charging the consumer and the sellers, then the profit has to come from logistics. Now, logistics in this case is open sourced. Of course, they have done well so far. Now, the companies, I think the net net market value that they reported should be about 30,000 crores odd, supposed to go at 20-25%. So this number in 3 years will be, if I just take that math, that probably 60,000 crores and then 1 lakh crores and whatnot. Now, the key question for us is that can a open source logistics support such high turnovers? Now, today we cannot say with clarity. Maybe we need to understand this a bit more better. But it is important to understand in this case, the logistics and the ad revenue, or rather the videos the influencer put, are the main source of revenues. They are not charging the consumer and the sellers. This kind of business model, which we call social commerce and all that, has existed in other countries, in China and also. So I think we will require some more time to understand that how it can scale up in India.
The content-led sales already hit, I think, on an annualized basis, 1,200 crores. So let's see whether that turns out. But the management said that at least on advertising, that is a lever because their ad revenue growth is less than what you have in other markets. So that's one lever that they would like to pull. Of course, the big one is logistics. Rana, thank you very much for joining us today. Great conversation. So many numbers you've shared with us and a way of thinking about valuations and analysis of companies. But let's turn our attention now to Poly Medicure. Now, this is a medical device manufacturer. So they basically produce disposable consumable medical devices like catheters, IV sets, syringes. The stock is down about 30% in 2025 so far. Himanshu Baid, Managing Director of the company, is now joining in. And we will focus on the guidance for FY26, the recent acquisitions and the inorganic growth plans, and finally, the domestic and export business. Thank you very much, Ms. Himanshu, for joining in. Now, last quarter, you lowered your FY26 revenue guidance. From 20%, you brought it down to 15 to 16% on account of export drag. Are you on track to achieve 15-16%? And what has been the Q3 performance on domestic and export so far?
See, if you look at the international markets, I think we have seen some headwinds in the international market, especially in Europe. And I think there were a couple of reasons. One, Chinese have been dumping, globally products everywhere. And I think that has, resulted in lower revenue. Plus, there was extra stocking. So I think that is more or less now, we have kind of, leveled up with that. So I think Q3, Q4 looks better. And I think when we issue a revised guidance, you look at the Q3, Q4 numbers. And if you look from H1 to H2, we are expecting growth of between H1 to H2 around 22 to 25%. So that's a big jump. And I think, and that's where we see the traction coming back in the international market, as well as domestic continues to, grow at a steady pace.
Okay, so you're saying H2 revenue growth over H1 will be 20-25%, and that puts you on track to achieve FY26 revenue guidance of 15 to 16%.
That's correct, absolutely.
Okay, and on exports, you're saying the worst is behind us. Exports grew only, I think, about 2-3% in H1.
It was actually flat. Actually, it was flat.
Flat, okay.
And, so domestic business grew around 18-19% overall, H1 in H1. But when we look at the export international revenue, it was almost flat.
Okay. And H2, how will exports look like? And is there any risk that export weakness, spills over into FY27? You're saying it's temporary and not structural.
No, I think we are now, negotiating a lot of new contracts. So I think, of course, we are waiting for the US deal to happen sometime soon. But that's something which is also holding us back in the US market, because a lot of, our customers are waiting for that to happen. And I think hopefully, we are hearing that it will happen sooner than later. So hopefully next year, FY27, US will start, pushing up. Europe will also start pushing up. So I think exports should come back to normalcy, I think, in FY27.
Okay, so till the India-US trade deal is struck, can we assume that exports will remain subdued?
This is maybe a small part of that, but I think majority of our exports were to Europe. Okay. And I think Europe is kind of coming back. So I think for us, Europe is more important today. And I think we are more focused to develop more customers out there. And that's happening as we speak.
All right. Hi, Himanshu. Good morning. Always a pleasure talking to you. What about the rupee? The rupee weakness is good for you?
It is absolutely good for us, Nigel. I think that's a blessing in disguise for sure. And and of course, we were lucky that whatever acquisitions we did before the major weaknesses happened in the currency. So I think that happened at a level where euro was around 100, 102, which is currently around 105. So I think both the acquisitions, have actually, been a kind of, a big change in how we look at the international business also, because we have added 2 new specialities in our current business, and I think that takes up a notch above a lot of other companies in a similar sector.
You made 2 acquisitions, right? And you were just saying that you're grateful that you did it before the sharp rupee depreciation. How much will they add in FY26 and how much in FY27? Will the entire 280 crore, which you had guided for, come through in FY27, or scale up, ramp up takes time?
No, I think currently with both the companies, we are seeing a revenue of around 300 crores in FY27. And in FY26, we'll see, because the acquisitions happened in September and November. So we will only see, few months revenue in both the acquisitions. So in FY26, we are seeing close to 100 crores. And then FY27 around close to 300 crores.
Got that. And you would still have a lot of cash, right? Even after these acquisitions, what is the cash balance? And are you open to another acquisition in FY27?
No, I think we are looking at adjacencies, whether we can add more products. Let's say in ortho space, can we, we are in trauma right now. So can we add some more products around that space? Or in cardiology, can we add more products? So I think that's what we are looking at. But maybe smaller adjacencies, not maybe, big ones. But definitely, so we still have a cash balance of around 750 crores plus in the company. So I think that way is pretty healthy cash flow and balance sheet today. So we look at maybe more opportunities, but maybe adjacent to what we have done so far.
What's the cash?
750 crores.
750 crore. And domestic is about 32% of your overall sales right now.
Yes.
And we had the GST cut. So I think even on medical devices, there was a cut in the GST rates.
Yeah, there was a cut in GST rate, so everything goes to 5%. But I think the bigger problem is the inverted duty structure. And I think that is where it is hurting the domestic manufacturing overall. Because of the inverted structure, our cash flows getting stuck in GST. Whereas for importers, I think it's the other way around, because their cost has come down and they don't have any inverted structure basically. So I think we are also, present to the government that at least they should look at this more holistically and allow, the refund process much quicker, and also allow refunds on services, because that is also, the money is also getting stuck there.
You all made a plea to the central government to get some protection to come in there, because I think in the past, Himanshu, whenever you have joined us, you have said those Chinese imports are worrying. So what is the status of the plea that you all have made?
So I think, it's a clear case of anti-dumping. In China, the Chinese companies, especially in renal sector, which I've been tracking very closely, and you are also doing it very closely, Nigel. I think they are, dumping the products in India. We have seen even the sales price is lower than the import price. When we look at the import data and we look at the, we've shared the data with the government, and, the selling price and to centers is much lower than the import price in many cases. So I think there's a clear case of anti-dumping here. And also, when we look at the cost now gets reduced because the GST has gone down. So for them, the import cost has come down actually. So it's actually hurting the local manufacturing, because we pay 18% on all our imports, GST. On the IGST side, or when we buy material domestically, we pay 18% GST. So there's a huge, disparity right now.
So you said about the company planning to add products in cardio, ortho, bring in some adjacencies. So for calendar year 2026, what are the top 3 priorities for Poly Medicure?
So I think for us, the top 3 would be to expand the ortho business and the cardiology business in India. I think that's what we are trying to do, because we acquired companies outside. We're trying to bring those products to India, start manufacturing in India, some of those products in India. So these are top 2 priorities. And then the third one is on the oncology side. We want to, add more products on the biopsy side. So I think that's what we are trying to do. And I think because we already have an oncology portfolio for drug delivery, so we are also, working on that. So I think these are 3 core businesses, because 50% of the patients in the hospitals are, covering these three NCDs. whether it's cardiology, oncology, or let's say renal failure. So I think these are some of the three things, as a theme, we are going to, stick to that theme and, develop more products around that.
Thank you very much, Mr. Beth, for joining in. Great chatting with you. That's the word coming in from Poly Medicure. But Prashant, we've got another guest joining in, Patrick Law.
Oh, no, absolutely. And, we're shifting gears from corporates to markets. Patrick Law is head of Asia Pacific, fixed income, currencies and commodities at Bank of America to decode what's happening in the fixed space, really, as far as India is concerned into 26. Thanks very much, Patrick. Great to have you with us here on the program. Prashant this side. So it's been a bit of a, write-off kind of year for India. A few years of very strong performance right on the top of the leaderboard in terms of equities. And this year, not so much. Even with regards to currency, if you compare it to other emerging market currencies, I think we are at the top in terms of how much we've depreciated against the USD. The general chatter and sentiment as we head into 2026, but these are forecasts, is that, well, it shouldn't get much worse, and maybe it'll get more constructive. What's the dominant driver, Patrick, to your mind, for India as an asset class into 26?
Well, from the FX point of view, the generally market expects a few things. First of all, interest rate differential versus the US. Number two is the balance of payment. And of course, number three is around the potential trade deal with the US. Unfortunately, the current account situation in India has deteriorated somewhat, swinging from a small surplus into a small deficit. And secondly, in terms of the capital flows, we have seen, equity outflows in India. So unlike back in 2023, there was a pretty good inflows into India. Last year was pretty much nothing. So the question is, among a lot of observers and also clients around whether, equity flows will come back. I think there's a lot of uncertainty around it because, the trade deal is still up in the air on one hand. On the other hand, the market overall is very focused on AI. And when we look at India, India definitely doesn't have a very big connection with the AI. So I think from that angle, the equity flows, may face some challenge into the next year.
Okay. So you're saying, and what will a trade deal change all of this sentiment around? I mean, is that the kind of the lever which will have the maximum impact?
Well, I think the trade deal would definitely help with the sentiment because right now the swing has moved from generally bullish or cautiously bullish to a little bit more bearish, given all the factors that I've mentioned on interest rate differential and capital flows. In the end, even with a trade deal with improving sentiment, we really need to see material capital inflows coming back to India so that the currency can, reverse the current depreciation trend.
On interest rate differentials, Patrick, I mean, the general assumption here is that we are done with what we've seen in terms of the last rate cut in India. In the US, though, we've got, the President Trump, who's pushing for more rate cuts, is, potentially the front runner for the next Fed chair has said, well, there's a lot more room. Now we'll need to see how much it... But if they were to get their way and rates were to drop substantially into 26, that problem kind of becomes smaller, the rate differential problem?
I would agree with you. If the US continue to cut rates while India holds rates steady, it would help support the India rupee for sure.
But you don't see that as a you'd assign it some probability to it, that kind of a scenario?
Well, I think, from the Fed's point of view, the FOMC's latest dot plot basically calls for one more rate cut in the new year. And when we look at market pricing, the market is expecting 2 rate cuts. I think these expectations are quite reasonable. I personally would expect, somewhere between 1 to 2 cuts. But of course, the swing factor is going to be the new incoming Fed chairman. So we still don't know who that person is going to be. If that person is going to be more aggressive, pushing for more rate cuts, of course, the scenario will change quite materially.
Okay. Just your forecast for the currency here, Patrick, the rupee, dollar rupee?
Well, I think, there's still a lot of uncertainty around, the future direction on FX, mainly because, everyone in Asia, not just India, is being held hostage by the overall general direction of the dollar. Obviously, what we have discussed, if the Fed becomes more aggressive in cutting rates, the dollar sentiment would change, and it would help not just the India rupee, but also Asia FX in general. But then, in the end, the Fed, is kind of moving very slowly. Then, I think it would be a struggle for Asia currencies to appreciate.
Yeah, got that. Now, just last thing, Patrick, commodities, right? Where do you stand on, let's just take precious metals if you have a view into 26, and then we can talk about some of the base commodities.
Well, I think, on commodities in general, there are, divergence for sure. If we look at oil price, there are many, many reasons, to suppress oil price going forward. But of course, on the precious metal, the story is completely different because the demand for gold and silver is not just based on industrial demand, but also based on demand for safety. So, I think we will continue to see some divergence across the commodity space into the new year.
So bullish gold and silver, not so much the basic commodities. But I mean, we are hitting highs there as well. Look at what's happening with copper, look at forecasts there, aluminum, for example.
I would agree. But like I said, if the demand on the some of the commodities are not purely based on industrial demand, but based on other demand as well, then, those commodities can continue to rally.
Patrick, leave us with like a non-consensus view, if you have one, across your area of expertise. What you think will happen, which no one expects will, in 2026?
Well, I would say that the market has some expectation that the incoming Fed chair will try to push interest rate lower. And as a result, the dollar can resume a downtrend. I would say the out of consensus call would be the incoming chair would find it very difficult to push the Fed as a whole to lower interest rates more aggressively. And as a result, the dollar actually doesn't go down. If anything, it can go up. So that would be a very out of consensus call.
Okay, that's interesting. Thanks very much, Patrick. We'll leave it there. Appreciate you joining us. Great chat, and look forward to speaking with you again in the new year. Well, I think we'll take a quick commercial break here. Markets are down. And I think there was a flash I saw saying that the Nifty is broken below Tuesday's low. Yesterday, we kind of sort of held that, didn't break it, but today we have. Up next, we focus on corporates once again. Cement in focus. The management of Birla Corp speaks with us about demand trends in the cement space into the new year. Aditya Sarogi of Birla Corp in just a bit.
"26 years of CNBC-TV18.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange, Sochkar, Samajhkar, Invest Kar. And Century Ply Club Prime, Raho Befikar.
We have carefully reviewed your performance and promoting you to branch manager.
Sir. Hello. Motilal Oswal.
When life goes to the next level, download Rise by Motilal Oswal. Investments and securities market are subject to market risks. Read all the related documents carefully before investing.
आपके कलीग्स भी आपका परिवार है। इनकी सेफ्टी से समझौता? नो चांस। इसीलिए पॉलीकैब ग्रीन वायर्स। इनके सुपीरियर इंसुलेशन इमरजेंसी में दे कम धुआं। पॉलीकैब ग्रीन वायर्स, India's safe, happy connection.
Hey, careful, huh? My daddy got it from abroad. Hey, disaster! How will you pay for the loss now?
In stock market, you should take risk as per your capacity and knowledge. Trade in options very carefully.
Wow, Dikra! Absolutely perfect. Take risk with full understanding.
This is Network 18, and you're watching CNBC-TV18.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best hai sabko pata hai. In association with Servo Hypersport F5, when speed is your default.